Welcome everyone, it's a pleasure to join you virtually, and thank you to Bursa Malaysia for the opportunity to co-host this important conference for the third year. This event is well known for sharing perspectives from a range of dignitaries and industry experts, and on behalf of Macquarie Group, I'd like to acknowledge Muhammad Iqbal Muhammad Noor, Deputy Senior Director of the Industry Development Division at the Ministry of International Trade and Industry, and Muhammad Junaisi Muhammad Noor, Project Director at Tenaga Nasional Berhad. Thank you for your involvement in this event and the insights that you'll generously share with our audience. Macquarie's been involved in Malaysia for over 26 years, and in fact, I have my own fond memories of living in Kuala Lumpur as we established our advisory business there in the 1990s. Fundamental to our approach in the 33 markets in which we operate around the world is to have teams of skilled people on the ground who are local, diverse, collaborative, and close to the challenges and opportunities that their communities need addressed. This approach and our long history in Malaysia has enabled us to build enduring relationships, and we're excited about the current opportunities in Malaysia with its rapidly evolving and developing economy and the government's increased focus on sustainability and energy transition. Today's conference is focused on growth in the electric vehicle industry and the opportunities and challenges ahead in Malaysia as this market continues to evolve. The scope of opportunities associated with the green transition is enormous, with the scale-up of clean energy forming the backbone of this transition. And we're seeing rapid growth in clean technology deployment, which is set to accelerate over the coming years. Renewables already account for a majority of new power plant installations, and the IEA estimates that they will account for almost 95% of the increase in global power capacity through to 2026. However, to meet our goals, we need to deploy these technologies even faster, especially in Asia, where energy demand continues to accelerate. The growing confidence that we can rapidly decarbonise the power sector, even in developing economies, is supporting the decarbonisation of other sectors, for example, through the deployment of EVs, the electrification of heat, and the production of green hydrogen. We need to act on these climate solutions. But EVs are an area where we expect to see significant positive impact on emissions over the coming years. Globally, we're seeing record EV sales with over 16.5 million electric cars on the road in 2021, increasing threefold in just 3 years, with China, Europe, and the US leading the way. Each year is bringing a new sales record. In some markets, EVs already account for more than 20% of new sales, despite rising inflation and the challenges the pandemic has caused for supply chains. And regionally, EV annual sales in Southeast Asia grew by over 30% in 2021 and are set to grow even faster in 2022. This positive dynamic is also visible in Malaysia. And in 2021, Malaysia was the second largest passenger vehicle market in Southeast Asia, behind Indonesia, and the second largest market for EV sales, although they still accounted for less than 1%. The Malaysian government has introduced a set of incentives to encourage EV purchases in its 2022 budget, aimed at improving EV affordability and accessibility, with further plans to expand the utilisation of electric buses and EV taxis. The government has an ambition to deploy 6,000 e-buses by 2030, which is a high target, but in line with activity we've seen in other markets in the region, and notably in China and India. And the pace of uptake of EVs globally is dependent on the size, income level, and policy environment of each country. But it's great to see that even in lower income markets like India, electric mobility is taking hold in the more affordable small 2- and 3-wheeler segment. Thanks to the dynamism and entrepreneurship in this smaller EV segment, the International Renewable Energy Agency expects that 20% of all vehicles in Southeast Asia will already be electric by 2025. Beyond accounting for a significant and growing share of demand for passenger vehicles, Asia is also the global manufacturing hub for EVs, and the transition is creating opportunities to invest in the supply chain and build future-proofed jobs, especially in Southeast Asia. Southeast Asian countries are taking notable steps to attract global supply chain investments and establish industries that are important parts of the EV ecosystem and supply. Governments in the region are starting to offer purchase incentives and setting long-term EV production and deployment targets. Battery cell manufacturing and critical mineral production capacity is also set to grow rapidly. Now, at Macquarie, we're committed to playing a leading role in driving the global transition to net zero. And for 2 decades, we've used our deep capabilities in energy, infrastructure, technology, and commodities to work with clients to create practical solutions to their decarbonisation challenges. And EVs are an exciting space for us, given the sector combines high growth activity, high infrastructure deployment, and ongoing need for investment. Now, our Green Investment Group launched Fleet, a new EV infrastructure development business aiming to create attractive financing solutions for commercial EV operators to deploy charging solutions for their fleets. And across Europe, we partner with Heliox, a rapid charging solutions organisation, to start delivering electric bus and truck charging infrastructure through an innovative charge-as-a-service model. And making our entry into the zero-emissions hydrogen fuel cell electric vehicle market, we're part of a consortium along with Hyundai Motor that has been awarded funding to help deliver hydrogen fuel cell electric trucks, which will be deployed in early 2023 in Oakland in California. Finally, we're excited to be leading the development of new blended finance platforms to drive the adoption of EVs across India with support of the United Nations Green Climate Fund. The Indian government has identified transportation as a key priority as part of its COP26 pledge to achieve net zero carbon emissions by 2070, and the initial focus of this platform will be on e-buses, shared fleets and charging infrastructure before expanding into other EV segments. The project also involves significant technical assistance and policy engagement components to support the Indian government and other relevant stakeholders to put in place appropriate enabling environments for EV adoption. Critically, making an impact in a market the size of India requires scale. The platform is therefore aiming to raise $1.5 billion from an initial $405 million equity commitment, and is expected to help avoid 9.5 tonnes of CO2 equivalent over the 10-year implementation period. For comparison, that's equivalent to 2.5% of Malaysia's emissions with just this one initiative. Now, these early experiences in e-mobility demonstrate how dynamic this sector is and the importance of working in partnership to overcome bottlenecks and accelerate EV deployment. So we're excited about all the opportunities ahead and the role we can play in Malaysia. And with that, on behalf of Macquarie, I'd like to thank you for joining us and hope you find this conference interesting and insightful.